It's Jeff. Welcome to our Tuesday live stream. And as always, we have our outstanding producer, Jill, on with us. Again, coming in from her gym. Must still have some work being done in the background there. I can see that got the weights. There might be a treadmill there. I'm not sure, but
yes, there is.
You must be fit. That's all I can say. You must be fit. All right, let's jump into it. And before we do, I need to read the standard disclaimer for the state of New York. That is as follows. Many of the questions we cover here are nuanced. We do our best to answer them, but our responses are meant to be directional, not exact. Your situation may require more details than we can give on a live stream. This live stream is for educational purposes only, and we haven't had the chance to speak with you one-on-one, so please treat this information as general guidance, not advice to act on. For anything specific to your situation, make sure you talk with a qualified professional. Speaking of qualified professionals, if you have questions about Medicare, give our trusted partner chapter a call, 440-703-1224. I will put there what it's called. It's called a lower third, by the way, for you Hollywood geeks like me, and are fascinated by that stuff. You can see it there. I think that position is better than there, but let's go with that right there. All right. All of the technical stuff out of the way. Jill, why don't I pass it over to you to lead the way?
All right, great. So I just want to remind all the listeners to please put your questions into the chat box regarding Social Security so that we can then take your questions live. If you did email a question in, we will also take those questions. And so since we don't have questions yet to take live, I will direct us right to our email questions. We have one from Wiley. He is asking a 3-part question. What is the best age to retire and collect/receive Social Security? That's for part A.
That is one of those questions that there's more than one answer. What is the best age to retire? I think that depends on your specific circumstances. Some people want to do it as soon as possible. Some people want to do it as late as possible. A lot of it depends on whether you love your job, whether you hate your job, what's going on in your personal life. So I think that that's one you have to decide on your own. And in terms of the best age to collect Social Security, there was a study done with data from the University of Michigan. It was fascinating, actually. And that data suggested that over 90% of people who collected Social Security filed at the wrong time. And what is the wrong time? Well, the data suggested that some people were filing too early. Some people were filing too late. They had a lot of information, a lot of questions that they were asking this group. And I think it was like 1,400 people in this test group. It was a good representation of the United States. And basically it came down to four different general categories. The first category was, do you need the money early or late? Some people need it early because, well, they have enough and they want to travel. They want to enjoy the energetic part of their retirement, which is for people, it's usually under 75. Some people, like my grandmother, she lived to be 100, and you could see her going at 90. But by and large, you start to, certainly by 80, the energy starts to drop. And so a lot of people want to enjoy that part of their retirement. Others are trying to protect someone. And so they file late to get the biggest possible Social Security payment. And think about things like long-term care or family members that they might need to take care of later on. Others just need the money. Life's been hard and it's available, so they're going to take it. And I always say in that instance, no one should judge that. If you look at the math around it, it's not the best reason, but it's certainly a valid reason. And so if that's your case, well, then it makes the most sense for you. I have a course called Social Security Simplified. Many of you have joined that course. Thank you for those of you who have. And it gives what I call calibration questions. And it's right in the first third of the course. There are 25 questions that you get asked to help you hone in on the biggies for you. And so if that's of interest to you, we can give you $60 off the course. And Jill will put the URL in the chat box, but it's something that I'm quite proud of. It took me almost a year to develop this course. And I jokingly say, if I got paid per hour, I would have been below minimum wage developing that course. I was putting in 60 hours a week at some points to get it done, but it's one I'm very proud of. And so Social Security Simplified, you can go to holyschmidt.com/social security, use the coupon code 60 off, and you get $60 off the course just for people on the live stream. So check it out if you're interested. And if not, that's okay too.
All right. And I did actually put the link into the chat box, but I believe that it did not load. So I will re-put that in.
I can
see it? Okay.
I see it.
Put it back in. All right, great. So Wiley's next question was, do we have to pay yearly taxes when we receive Social Security?
That depends on if your Social Security is taxed or not. There are a lot of instances where it's not. Even if you fall into the taxable Social Security realm, and that's all determined by something called combined income, which is a pretty in-depth calculation. You still may have enough deductions so that you aren't paying taxes on Social Security. If you'll be more likely to be paying taxes on Social Security if you have a lot of adjusted gross income than if you don't. But a lot of people, I think the stat is 80% of Social Security recipients do not pay tax on Social Security.
And in regards to that, Thomas Burdulis is saying, do I have to pay federal taxes on Social Security?
Well, since it's come up a couple of times, why don't I just talk about this a little bit more in depth? Social Security was tax-free until 1983. And so the vast majority of people, when you ask them if their Social Security is taxed, and this is people that aren't coming into retirement season, and I would say that's 60 plus, they don't think they pay taxes on Social Security. And there are a lot of provisions in the tax law which reduce or eliminate tax on Social Security. And one of the campaign promises of the current administration was the elimination of tax on Social Security. And they put in place a 65 plus deduction to help get it there. So there is no law that says you don't have to pay tax on Social Security. That was eliminated after 1983. But there were guardrails put in place, and those guardrails were basically adjusted gross income levels you had to go beyond in order for you to even have Social Security considered taxable. What are those guardrails? Well, they are if you're single, if you earn more than $25,000 a year in in provisional income, then you could be taxed on your Social Security. Up to 50% of your Social Security could be taxed. If you earn more than $34,000, up to 85% of your Social Security payment could be taxed. If you're married, filing jointly, it's $32,000. Up to 50% could be taxed if you're earning more than, if your provisional income is more than $32,000, and if your provisional income is more than $44,000, then up to 85% can be taxed. Now, what is provisional income? It's your adjusted gross income plus half your Social Security payment, plus any interest-free income you receive, usually muni bonds or our muni bond fund. That just means that if you go beyond these levels, your Social Security payment, a portion of your Social Security payment could be taxed. Then you fall into the normal categories of tax deductions that are available to you. And we put out a video at one point, and that video suggested that if you earn less than $98,000 a year, maybe it was $98,500 per year as a couple, you probably weren't going to be paying tax on your Social Security payment or any tax at all. And so that's where that 70 to 80% of the population doesn't pay tax on Social Security, because most people going into retirement don't have that much money, that much income coming in. And so the odds are low for most people.
All right. And the third part of that question is, can I work part-time after age 62 and receive Social Security? If so, how many hours?
Well, it's not based on hours, it's based on income. And so hopefully you're not working many hours and you're getting up to the maximum income that you can earn. And I'm looking at this sheet here, which is my Social Security Quick Guide. And this has all of this data that we're talking about on here. And if you look right at the middle here, it has something called an earnings test. And in 2026, if you earn less than $24,480 per year, then you don't have to give back any of your Social Security to the SSA. If you earn more than that, then you have to give back $1 for every two over that amount. Now, when I say give back, it's not gone. It's as if you didn't draw it from the Social Security Administration, and it gets added to your base, and it comes back to you in the form of a higher Social Security payment when you reach full retirement age. And so this assumes that this isn't the year that you reach full retirement age. If this is the year that you reach full retirement age, the limits are $65,160 until you reach full retirement age, and then you have to give back $1 for every $3 over that limit. Once you reach full retirement age, you can earn as much as you want, and none of your Social Security is you don't have to give any of your Social Security back to the SSA. So those are the thresholds for part-time work. Most people will be focused in on the $24,480 number because most people are interested in working earlier than 67. But as you get to 67 above, people tend to want to work less. And so, and just as an aside, in your first year, it's not a $24,480 threshold. If that was the case and you retired mid-year, many of you'd already be over it. And so that 24,480 turns into a monthly test. And so it's just divided by 12. And that is the monthly amount that you can earn without having to give anything back to the SSA.
All right. And I have put into the chat box how to get the Social Security Quick Guide at holyschmidt.com/quick guide for whoever would like to get that. Also, did I do that one right?
You did. I'm just looking at the comment below that. It's funny, but.
Oh, okay. All right. So we're going to move on to the next question. And just a reminder to everyone that tonight we are taking questions on Social Security. We cannot take live questions on disability. They're very specific to each person and have different laws surrounding them. So you can email them. Jeff, do you want to tell where they can send an email
Sure.
to you?
If you have, and this is anything that we here on the live stream, we cover general questions about Social Security, general questions about Medicare. We usually wait for Ari to come on for that because he's the Medicare expert. He's at our partner chapter, but we answer them too. It just depends on if we have time or not. But if you have specific questions about disability, we get questions about Roth conversions or the Roth in general, because we do a lot of that on the channel. Just email them to livestream@holyschmidt.com and we'll send you back a response with all sorts of disclaimers, again, because your situation may be different than the response we're giving you. So it's just general information that is directionally correct.
Okay, great. Thank you for that. All right. So D. Kiley is asking, when should a city government employee that will receive a pension but plans to work past age 65 start to collect Social Security?
Well, it's the same answer as the first question, which is Social Security pensions, particularly since the windfall elimination provision was eliminated. Pensions are a nice element to have. They don't count against you when it comes to the earnings test. So it's really, what is your specific situation? Whether you're whether you need to take the funds early because you have commitments you have to take care of, or you want to push them back because you want a larger Social Security payment, or somewhere in between. There are a lot of reasons to wait. There are a lot of reasons not to wait. A pension's a wonderful thing. I read the statistics somewhere, and I think it's one out of 5 people have a pension, and most of those are government workers or government adjacent, like the railroad, for example. But most people don't have a pension. So if you have a pension and you can collect Social Security, well, that's wonderful. But your decision is based on your specific circumstances.
All right. Mark Q3D7B has a question. Do my restricted stock grants that vest after I retire at age 62, 63, and 64 count as earned income and cause Social Security benefits to be clawed back?
Usually not. The one thing you need to be cognizant of, and this is very important for this, by the way, again, restricted stock grants are rare, but if you're an executive, that's part of the compensation package. They pay you less, usually a lot less, and they give you shares in the company, but you don't get access to those shares until later. And one of the trade-offs there is that you get paid less, but you get these grants later, and there are rules around them. You can't go work for the competition, or you can't say bad things about the company, or whatever the restriction is. But if in most companies, if you retire and you're considered what's called a good employee, you retire and you're not going to work for the competition, that's usually what it means. If you're an executive, you're often given these grants. And sometimes these things don't mature for 5 years. Now, when you have them, how you receive them is pretty important. I would talk to your HR department, your people department, depending on what it's called at your company, and make sure that they're coded right. Because if they're coded as just general income, that's when you're gonna have to fight. If they're coded as what they are, then you probably won't have to pay. You probably won't have to worry about it being considered income, and that's pretty important. This question comes up all the time, by the way.
All right. An emailed question from Doug. I will turn 65 next January, and my wife will turn 65 in March. If I claim Social Security at 65, but my wife waits till 67, will she receive 50% of what my full retirement age payment would have been, or would she only be eligible for half the rate I was eligible for at 65?
So, Doug, this is the single most confused question people get. We get this question all the time, and it's because of all of the exceptions, the rules, and the exceptions, the rules that are built into the Social Security Administration information. The spousal benefit has nothing to do with the age in which the primary insured files for Social Security. So, Doug, you could file at 62, and your spouse will get 50% of the spousal benefit if she waits until she's reaches full retirement age. It's based on her full retirement age filing status. It has nothing to do with when you reached full retirement age and whether you wait until full retirement age. It's all about when your spouse filed for the spousal benefit. This gets confused a lot because there are other benefits, namely the survivor benefit, which does have a very strong correlation to what the primary insured was earning before the primary insured passed. But for the spousal benefit, it's based entirely on the age of the spouse when he or she files for the spousal benefit. The only caveat here is that the primary insured must file first. So your spouse can't file for the spousal benefit, and if you haven't filed for your primary insurance amount, that unlocks the spousal benefit.
Okay, Jim Vilchek is asking, is the spousal benefit and the survivor benefit both affected by what age the surviving spouse files at?
That was that was the same question, sort of. So I'll get in more detail. For the survivor benefit, no. Sorry, for the spousal benefit, no. For the survivor benefit is the benefit that's transferred to the survivor when the larger earner passes. But if the larger earner files early, that benefit is smaller. If they wait longer, then the benefit is larger. If the primary insured waited until age 70, using today's data, using today's full retirement age of age 67, that means that the surviving spouse would get 124% of the primary insurance amount, with one caveat. And that is, the surviving spouse also has their own haircut schedule. It's right here on this Social Security quick guide, holyschmidt.com/quick guide, by the way. There's a column here. It's called percentage of survivor benefit. And there's a reduction in the survivor benefit based on the age in which the spouse files. The spouse can file as early as age 60, 50 if they're disabled, but they get 71% of the survivor benefit. Conversely, they can wait until age 67, assuming that you're using the 2027 full retirement age, and they get 100%. And so if the primary insured waited until they were 70, then they get 100% of the 124%.
All right, great. Let's take another one from email from Doug. Another Doug. I'm already collecting Social Security. If new work earnings replace lower earning years, when does Social Security usually increase my benefit?
Usually in the fall. And so if you look at the inner workings of the Social Security Administration, first of all, there's one thing that is almost universally true. They're really nice people. They are there to serve. They act like they're there to serve. They chose that job because they want to help. But they are also constrained by technology. And a lot of people, particularly as you get closer and closer to retirement age, don't realize how important technology is when it comes to servicing 57 million people and their Social Security payments. And so if you continue to earn income and the Social Security Administration takes your best 35 years and uses that as the base for your Social Security payment, even if you're receiving Social Security, your base gets recalculated. And it should happen automatically because of the technology. Sometimes there's a bit of a glitch, but it should happen in the fall. If it doesn't happen, they will catch up and they will give you a catch-up payment because it was owed to you. But sometimes because of this technology lag, it might take a period of time, and then you'll get a nice surprise letter in the mail. If you don't get the surprise letter, it's worth a call. But yes, they take your best 35 years and they use that as the basis for your Social Security payment. And then beyond that, your Social Security payment could continue to go up.
All right. Wed has a two-part question. Question one is, if I want Social Security to start in July, when should I apply?
You can apply up to 4 months in advance for your Social Security. 2 months is okay. Given the shortages in staffing at the SSA, I would probably lean more towards 3 or 4, but the advertised time span is 2 to 4 months. So do it as early as 4 months before you want to start receiving Social Security. Now, one point to note is Social Security is paid in arrears. So if you want your Social Security to start in July, you'll get your first Social Security payment in August. And so it will be for July, but your payment will actually arrive in August.
All right. Mike has a very similar question, but I will bring it to you as well. Can I file for Social Security and claim immediately? In this case, May, or should I file at least 3 months in advance? I reach full retirement age in October?
You can file and ask for a payment expedited. I think in that situation, you're probably going to find that if you file, the timing won't work the way that you think it'll work. They'll get to it as fast as they can, and they might send you 2 payments instead of 1. But 2 months is sort of the minimum in my mind. We're in April, and so if you want to start in May, it means that you actually would receive the payment in June. If you wanted to receive the payment in May, I think you're beyond the point. I would give yourself 2 months at least to make sure that you get it right. But the good news is that the longer you wait, the larger your Social Security payment. There's a misconception. It's this weird thing that people just don't fully grasp. And when you look at how stuff is advertised when it comes to Social Security, you go onto the SSA website, and the headline number is what happens at 65, at 66, at 67. But you can also take Social Security is 65 in 8 months or 67 in 10 months. And the longer you wait, the larger the payment, and it's by month, it's not by year. So you don't lose the step up if you wait 60 to 66 and 4 months. You get 4 months of additional increase. But if you look at the data, a very large percentage of the population, I think it's over 50%, files on a 1 year mark of their birthday. And so 62, 63, 64, 65 on the birthday. And really, you don't need to do that except for if you're trying to hit 2 specific ages. One is age 70. You definitely don't want to wait beyond age 70 because you won't have any benefit. Your Social Security payment does not increase past age 70. And the other is full retirement age. And for a lot of people, most people watching this, it's 67. If you're waiting for full retirement age because you want stuff to unlock, and a lot of unlocks at full retirement age, you can work again, for example, and get your full Social Security payment, then that might be a reason to wait for the anniversary mark or your birthday anniversary mark. But outside of that, for every month that you wait, there's an increase, and it's somewhere between 0.5% and 0.2%.
All right. Wed's second question was about spousal benefit when husband delays to 70. If I delay benefits to 70, is my wife's spousal benefit based on my age 70 amount or my full retirement amount?
This is the one we talked about before. It's based on your full retirement age amount. And it works the other way too. So earlier we talked about the fact that if you filed early, let's say 62, at 62, you would get about 70% of your full retirement age benefit. Your spouse doesn't get half of that if your spouse files at his or her own full retirement age. They get 50% of your full retirement age benefit. Conversely, if you wait until age 70, you get 124% of your full retirement age benefit, but your spouse doesn't get any more. The maximum your spouse can get is 50% of your full retirement age benefit if they wait until their own full retirement age. Again, they can't file for the spousal benefit until the primary insured goes first. That unlocks the spousal benefit.
All right. Scott Mertlick is asking, I'm already taking Social Security at age 66. Now I'm 68, just signed up my wife at 66 for Social Security. She was paying Med Part B separately. Will Social Security automatically take the Medicare premium from her Social Security payment?
They should, but I would talk to them. Because if this was, remember that discussion we had a few minutes ago about how the technology is a little behind at the SSA? They should catch it, but it's worth notifying them and giving them a call. You're gonna have to wait on hold for an hour, but just take your phone, put it on speakerphone, set it down, and go do some other work on your computer or whatever it is you're doing. And then when they come on, just make sure that they actually see it.
All right. And thank you, Matt Costa. He's adding some gratitude to the chat box. He's enjoying the show. Thank you for being here, Matt. All right. Tamarama is asking, is there an online calculator that helps to determine whether it's better to draw down your 401k to allow delaying taking Social Security?
Yes. Although, to be candid, I probably would be careful using the online calculators. The thing about an online calculator is if it's a simple question, like what's my Social Security payment going to be at age 68, and you have enough data, it's going to be reasonably accurate. The minute you start adding variables into the equation, the online calculators become less and less reliable. What I would recommend instead, and this is something we're going to be publishing an interview we did with Bolden's CEO in the next few days. Wonderful software. I personally use it. It's the personal financial planning software that I personally use. In fact, it's so good that I went to Bolden and I asked them if we could be an affiliate of theirs. And you'll want to use something like Bolden if you want to get that right, because that's a lot more robust. Bolden has 2 weeks free, and you can just go to go.bolden.com/Schmidt, and you can get 2 weeks free. Then after that, it's $12 a month paid annually, so $144 a year if you decide to keep it. But you can do a lot of this in that software, and in my opinion, it's much better than trying to use an online calculator that doesn't have all of your data. If you think about what you actually need is you need to know what your 401k balance is. You need to consider things like longevity. You really want to know a lot more information than you can dump into an online calculator. And usually those online calculators, once you start putting in information, if you want to get the report, you actually have to do something to get that report. You have to sign up for something usually. And so you can Google it, check it out, see if it works for you. But in my opinion, using an inexpensive tool like Bolden is much better.
And I have put into the chat box how to get a hold of Bolden. It's go.bolden.com/Schmidt.
Yeah, that's our affiliate code. You can get 2 weeks free of their full featured software. And if you decide to keep it, then it's $12 a month after that.
All right. Scott Holt is asking, I turned 62 in February 2027. Will I get the 2027 COLA?
Yes, but not the way you think you do. So the cost of living adjustment is at age 59. 59 is the last year that you get to adjust the base of your Social Security payment based on historical earnings. And just to give you some context on this, if you earn $10,000 in 1983, and I'm making these numbers up, but I think they're about right. You look at your earnings history. If the SSA just said, you know what, he made $10,000 in 1983, we're going to use that as his base, your Social Security payment would be tiny. And because $10,000 in 1983 isn't the same as $10,000 in 2026. So what do? They give you what's called a wage index. And so 1983's $10,000 might have a multiplier of 4.5 times. So it's $45,000 in today's dollars. They do that all the way up until age 59. And then at age 60, your wage index multiplier is 1. So age 60 and 61, you get a 1x multiplier. Why they have just 2 years of nothingness, I don't know. But it's probably to make the calculation easier. Once you reach 62, whether you take Social Security or not, instead of getting a wage index multiplier, you get a cost of living adjustment. It's a different base. The wage index multiplier is based on earnings and earnings inflation. The cost of living adjustment multiplier is based on the consumer price index, and specifically something called CPI-W, which is for wage earners and clerical workers. Basically, people that earn an hourly salary or similar, and that particular subset is the basis for the cost of living adjustment going forward. And whether you take Social Security or not, in addition to the increases you get for waiting, you also get the cost of living adjustments. And so someone incorrectly thinks they're looking at this schedule here, and they're saying, well, if I get a 70% increase at age 62 and a 75% increase at age 63, what happened to inflation in there? Don't I get that? Yes, you do. It's that increase between 70% and 75% does not include the COLA. You need to add the COLA on top of that. And so your base, whether you take Social Security or not, starts increasing at age 62, including the cost of living adjustment.
All right, great. So Kim has emailed in a question. If I started Social Security mid-year and still work part-time, how does Social Security apply the earnings limit?
Yep. So this is same question, but different way of asking it as earlier. The annual earnings test of $24,480 per year, everybody or a large portion of the people out there would fail that test if they just assumed that anything they earned in the year that they retire goes towards the earnings test. The SSA says, you know what, we're going to ignore everything you earned up until the day you retire. Once you retire, your first year only, we're going to take $24,480 divided by 12, and that's $2,040 per month, by the way. That's the maximum you can earn per month without having to give part of your Social Security payment back. If you earn above that amount, you have to give back $1 for every $2 over the amount. And so that calculation starts once you start receiving Social Security, not before.
All right, Jim Vilchek has a question. Is the surviving spouse benefit affected by when they take Social Security, even though the one that passed waited until 70?
It's affected in a positive way. The longer the deceased waits to claim their own Social Security, the larger the payment up until age 70. And anecdotally, for those of you who geek out on this stuff like I do, if the deceased never claimed Social Security, the date that they deemed to have filed for Social Security, that's the thing, that's the base that gets passed on to the survivor, is their date of passing. So if they passed away at 69 years and 11 months, then it was as if they filed at 69 years and 11 months. There is something going the other way called the widow's limit, and this is rather complicated, doesn't apply to most people, but if the deceased filed earlier than, I believe it's 63 years and 9 months, then as long as the survivor waits until their own age 63 and 9 months, they get the amount they would get at as if the deceased was 63 years and 9 months. I believe it's 82.5% of the Social Security payment. The important part here, though, the important thing to remember is that's a reasonably complicated calculation. And if it's something that affects you directly, email me at livestream@holyschmidt.com, and I'll walk you through how it actually works.
All right, great. So now Ava is asking, when are your earnings credited in determining your monthly benefits? If retiring at the end of the year, December 2026, will December earnings count towards your monthly benefits?
They will. They just they may not be included initially in your payment. Remember, I said at the beginning that there are the folks at the SSA are generally really nice people, but the technology is a little bit behind. And so what ends up happening is they'll get it right, and then they'll give you a catch-up payment once they get it right. But they do need to, it may take them 9 months. If you're looking at your payment 9 months after you retire, after the fall, basically, and it still hasn't been adjusted up, or if you haven't got a catch-up payment, it's worth a call to them because that amount is owed to you, and they're not looking for reasons not to pay you. They just haven't got to it yet.
All right. Paul Marino is asking, if my wife claims at 62, will she get bumped up to half of mine when I file at 67? We are both currently 61.
Usually not. This question usually has some things that are implied that aren't actually given in the data set. But let me give you the traditional example. Let's say that your wife's own Social Security payment at full retirement age is $1,000 a month. And let's say that her spousal benefit at full retirement age is $1,500 a month. But your wife files early for her own benefit. Instead of getting $1,000 a month, she files at age 62, and she gets 70% of that $1,000 a month. That's $700. Well, she's reduced her own payment by $300. So when the spousal benefit kicks in at full retirement age, then for the last 5 years, she was already receiving her own benefit. And so when it comes time to calculate the spousal benefit, approximately, and this is approximately $300 will come off of the spousal benefit. So if it was $1,500, it would be $1,200. This isn't exact because I'd need a spreadsheet to do it, but it's directionally about right. So every Social Security payment, every spousal Social Security payment includes an element of the original or the primary insurance amount that the spouse would have received if they filed early, and a spousal top up. So the top up would be reduced by that $300.
All right. We have a question emailed in from Bert. He is asking, my wife has a state pension and no Social Security credits. After repeal of WEP/GPO, can she get spousal or survivor benefits?
So for those of you that don't know what WEP and GPO means, that's windfall elimination provision, government pension offset. And most people thought it was really this unfair thing, which was if you earned money and they took money out of your earnings for Social Security. A good example might be a teacher. And a teacher works all year and they pay into a separate retirement vehicle. And that vehicle is used to provide them with a nice pension, but then they get a summer job. And in that summer job, they might do things like grade ACT exams or something like that. And they get a 1099, they pay Social Security on that. But because they had this windfall elimination provision or government pension offset, depending on which part of the sector you worked in or which part of the world you worked in, there was a haircut on that. There was no good reason for it. You contributed the same amount as somebody else in that role, but that payment for whatever reason was haircut. And there were some provisions which got you closer to 100%, but never at 100%, or I can't remember it being 100%. I think the highest it ever got to is 90%. That was eliminated in December of 2024. And so now the earnings from that person aren't reduced. Now, the only thing I will say there is that it's based on the contribution to Social Security. So in that instance, they might have contributed less to Social Security. The spousal benefit, on the other hand, is fully available in most cases anyway. And so in the question you're asking, does your partner who had other income where they didn't pay Social Security do they still receive the spousal benefit? In most cases, the answer is yes, now that provision has been repealed.
All right, great. So Kevin is asking, would 80K Social Security plus 20K Roth withdrawals create federal taxes?
Well, first of all, a Roth isn't taxable. And so you're really asking, would 80K of Social Security create federal taxes? I don't know your tax situation. I would say if you have 80K of Social Security, it's for you and your spouse, because individuals don't receive that much. I think the maximum is $5,000 a month or $5,100 a month. If you go back in time, someone who retired a long time ago, I think the maximum they could have is $5,400 a month. So 80K means that you're talking about you and your spouse. And I mentioned this video I did on, I guess it was 2 months ago, which showed that if you earn less than $100,000, you're probably not going to pay taxes on your earnings, given all of the standard and non-standard and itemized deductions available to you. So probably not, although I don't know your specific situation. I don't know if you have dividends. I don't know what other income you have coming in. But if you're talking specifically about 2 Social Security payments and that's all you get, I would say probably not. Probably not.
All right. Lily is asking, are medical deductions over 7.5% of AGI factored in before or after other deductions?
This is a tax deduction question. And so this probably doesn't apply to a lot of people. Why don't you email that into livestream@holyschmidt.com, and I'll come back to you on it, because it's not something that this would take too much time to walk through for this group. But I'm happy to answer it for you, just not on a Social Security live stream.
Okay, great. And so someone was asking about when will Ari be back, because they enjoy the tag team. And so Douglas Mandela was asking, and Douglas, so Ari comes on often, but since this is a Social Security channel, we have been inundated with so many Social Security questions. So he doesn't come on every week, but he will certainly be back soon. Right?
This is actually a really good opportunity to talk about Chapter. I had the opportunity to recently to meet a very large number of their Medicare advisors. And I've got to say, if you look at before we ever bring on a partner on the channel, and we only have 3, because we get inundated with people wanting us to sell something. I can't tell you how many crypto affiliate, gold affiliate, and other that approach us every single month. I think conservatively we get approached 25 times a month, maybe more, 300 approaches a year, and we only have 3 affiliates. That should give you an indication of how very specific we are on who we do business with. And when you look at Chapter, overwhelmingly the data is wonderful about the company, but what really is so special are the advisors, the Medicare advisors. And I had the opportunity recently to talk to 50, 60, 70 of them. It was a Chapter event, and I just walked around and said, "Hi, I'm Jeff Schmidt, and I don't know you." The ones I know, I didn't say I don't know you. And overwhelmingly, they said, "What can we do better? What can we do more? We really want to deliver for your viewers." And so Ari is a representative of this company, but as you know, people are asking for him because the company is that good. This isn't me being on a soapbox about Chapter, but it did remind me I wanted to remind everybody that I did meet with something like 70 of their advisors and talk to each one of them over the course of several hours. And it was the same message over and over again. We're here to help. We want to deliver. What can we do better? and Ari. Hopefully, we'll have them on in the next week or two. But if we do answer a Medicare question or two, we do know the answers. I would just rather that it came from Ari, because candidly, he is answering these questions every single day, and he's got his finger on the pulse of what's happening in the moment.
And he does have a book called It's Not That Complicated. And if you send an email into livestream@holyschmidt.com and type Ari's book, we will send that to you complimentary, his book. I did put that into the chat box as well. All right. So James is asking, hi, Jeff. You said the maximum Social Security collected monthly is $5,100-ish. Is this for the individual or couples?
This is the maximum Social Security payment. If for people who are collecting Social Security in 2026, it is 51. Don't quote me with the exact number, because it depends on where I read it. The SSA was 5107, might have been 5114 for an individual, and that means that this goes back to that comment about the $8,000. That is for someone who earned the maximum possible taxable earnings. And for example, in 2026, up to $184,500 of someone's earnings, if someone earns up to $184,500, they have to pay Social Security tax on that. And anything above that, they don't. Well, let's just say that for whatever reason, you hit it big and you're making that every year since you were 20 or 30, you've got 35 solid years paying the maximum Social Security payment. That's how you get to that $5,100, 51 and change. But what was really interesting though is if you do the math, because of something called bend points, the 85th percentile, which is between $25 and $3,000 a month, can be achieved by just about anybody with a really solid work history. They just need to have 35 years of solid work history. And so, in fact, I think I put a video out on this. If I haven't, it's coming out soon. And so people look at that $5,100 and they say, well, that's impossible. Maybe, but if you earn a fraction of that, half that, less than half that, if you earn a third of that, you can still get more than a third or more than half of that payment. And so when we were talking about that person who said that they were getting $8,000 a month, undoubtedly it's that plus the 50% spousal benefit. Back in the day when Social Security was full retirement age was 65, and that was before 2000, they had 5 years of additional increases and they could get beyond 124%. And that's why I say that there are people who have earlier full retirement ages, 65 and a half, 66 maybe, that can get closer to the $5,400. But 51 and change is based on today's maximum earnings, assuming that you earned 35 years at or close to the maximum.
All right. Dean emailed in a question asking, should concerns about Social Security solvency make me claim early?
No, I wouldn't. No, sorry. I got to be careful with absolutes. I wouldn't worry about it. And the reason is as follows. There's a lot of fear around this, and I get it. I mean, we are in a weird time in the world where anybody that owns a computer can put up a website and say just about anything that they want, and it'll scare the heck out of someone. You don't have to have passed the credibility test to get an article that goes viral. The fact is, I can tell you that this group is thinking much more about that 2032, 2033 cliff than politicians. And the reason is because this isn't happening in this election cycle. And politicians deal with things that are almost always an immediate threat. Think about the global financial crisis of 2008. Nothing happened until they all got together and they voted. And I don't know if you remember 2008. I do, because I was still in the banking business and I was watching this with great interest on TV. But Congress got together and they voted to have bailouts for the banks. And people were saying, well, why would we give bailouts? These are well-funded institutions and bankers make a lot of money. Why should we do that? Well, the U.S. relies on its banking system. And if you don't have a banking system, it's a bit like not having wheels on your car. And so these bailouts were provided, but it took two sets of votes. The first set, it failed. And the second set, it passed. And then banks were forced to take money whether they needed it or not. Generally speaking, when there's a crisis, then the outcome almost always ends up being let's throw money at it. And I don't mean that in a negative way, but there's history on this. And all you need to do is go back to 1983 to know that this is true. In 1983, it was the current Congress. They had basically 2 months of reserves left in the trust, 2 months of payments. And if something wasn't done, people were going to get their Social Security check cut. It was like a done deal, except for the fact that if that was to happen back then, I don't know what the number was in 1983. I should probably know this, but maybe 20 million people were receiving Social Security at the time. Imagine 20 million people calling up their kids and saying, I'm moving back home. And so it was dealt with, and the way that they dealt with it is they raised the Social Security tax from 5.4% to 6.2%, and that was enough to solve the trust problem. But they had a bigger problem, that is that population was growing and workers weren't growing as quickly. The retirement population was growing, but the worker population wasn't growing as quickly. So they raised the full retirement age gradually to 67 from 65, but they waited 18 years to do it. I think it's highly unlikely that there won't be a similar amendment to the Social Security Act of 1935. And just for reference, there have been about a dozen major amendments to this act. You don't see it because you weren't around in 1935 or 45, or if you were, some of you might have been around in 45. You weren't reading the newspaper back then. But there have been a lot of amendments, both positive and negative, to the Social Security Act to prevent it from running out of money. A lot of the changes were for the good. The spousal benefit was added, I think it was in the 50s or 60s. I should now that's not really something I should know, but I could probably look it up. But there were a lot of things that were changed, and they're almost always, I can't think of any single one of those which was a shock to the system. And I think that Jeff Schmidt, thinks that when the time comes and it's the next Congress, they'll be forced to put an amendment in to raise the. My guess is they'll probably raise FICA. I don't know for sure, but they'll deal with it, because right now we have 57 million people that are receiving Social Security. Same issues as back in 1983. Imagine if everybody got a haircut of 28% or 23% or 24%, whatever the number is. You're gonna have a lot of people calling up their kids saying, I'm moving back home. And nobody's going to vote that Congress in next time. And both parties have said that they're going to ensure that there's no cut to Social Security. So it's a position that both parties have taken. They're very public about it. This isn't a push-pull thing like so many other issues. The political parties are aligned. I just don't think it's going to happen for another 4 years.
All right, we are rounding the top of the hour, but maybe we can take a few more quick questions. A bunch just came into the chat box. Myas's Dragon is asking, do people who haven't worked enough to get 40 credits receive any Social Security benefits?
Not on their own work history. They can receive the spousal benefit, but you need 40 credits. That's the ticket to the game. And so if you have, but also the thresholds are not that much. I mean, I think it's like 8,000, maybe it's $8,200 a year that you need to earn to get 4 credits. And I'll give you the exact number. I'll post it in the description below. It's not something that most people think about because it's so low. If you find yourself a little short, get a part-time job and get to 40 credits. You need to get to 40 credits.
Do you like Mike Paper's website, Open Social Security? From Josh.
That's fine. But I would prefer to use the IRS. Sorry, I would prefer to use the SSA's website in terms of gathering information. But yeah, there are a lot of great Social Security websites. Devin Carroll has a wonderful site. There are a lot of good ones out there, and the thing you want from that site or any site is that you just want to make sure that the information is accurate and not sensationalized. And I can't stress sensationalized enough, because sensationalism gets clicks, but it also scares people unnecessarily.
All right, we have 2 left in the chat box. Let's see if we can just get those asked. I'm only 46, but Social Security says 2,500 at 70. Will Social Security index for inflation, or around 2,500 is what to expect?
No, it will index for inflation, and it will also index for your earnings increases. At 45, 46 years old, you're probably going to have earnings increases, and the SSA takes your best 35 years indexed to today's dollars, like I was talking about earlier, and they use that as the basis for your Social Security payment. That gets fed into the formula to determine your Social Security payment. So I wouldn't look at that. At 46, that number is not going to be very accurate. The closer you get to retirement, the closer you get to claiming, the more accurate it becomes.
Okay, and BP Gary is the last question for tonight. Does the earned income limit include pension income or 401k withdrawals?
No. It is income from employment or from self-employment. If you work for someone or if you work for yourself, that is used to calculate the earnings limit. But if you're receiving a pension, that's wonderful. That's great. Take your pension, work on the biggest possible Social Security payment if that's what's of interest to you, or the earliest possible Social Security payment if that's what's of interest to you, or somewhere in between.
All right, so we've gotten through those questions. We still have a lot more emailed questions, which we will bring next week. While Jeff is closing us out, I will re-put in all those links that we mentioned before for those that joined us late. So Jeff, I'm going to turn it back over to you. And thank you for all the gratitude in the chat box. We really do appreciate that.
And gang, thanks for staying late with us. It's 8 o'clock here in New York, and a lot of you are on the East Coast, and it's 8 o'clock your time. Actually, if you're out in California, it's 5 o'clock your time. Still pretty late, and you've given us your time for the last hour or so. So on behalf of Jill and I, we thank you for spending the hour with us. Every Tuesday, with rare exception, we'll be on at 7 o'clock. Jill, thank you for your expert guidance through the last hour or so, making sure that we get the right information to everybody in the chat box. And we look forward to seeing everybody at this time, 7 o'clock next Tuesday, and from there on Tuesdays. Thanks, everybody. Thanks, Jill, and we will talk to you later. Bye now.
Bye, all.